I'm Denise Co-Genovese from IPEM, and today I'm joined by Iyobosa Adeghe, investment partner at Coller Capital. Bosa, thanks so much for stopping by for a chat.
Pleasure.
Let's talk about secondaries. Many people say it's a fastest growing area in private markets. What do you think is powering the surge?
I think a big part of it is a recognition on the part of investors in private equity and alternatives in general, that there's real value in being proactive about asset allocation. A world in which you make a commitment to a manager or a vehicle on day one and do nothing with it for the next 10 years seems to be going away. There's a real understanding that the world changes, your preferences as an investor may change, and you should express that through modifications to your allocations by region, by manager, by strategy, more proactively from time to time. And the secondaries market allows you to kind of express that view.
And do you think this level of activity is here to stay, or do you think it's cyclical and we'll soon see it pass?
I think it's very much here to stay. In any given year, in any given couple of years, there may be certain dynamics that result in spikes potentially in activity. But in general, the core driver of volume year on year is a recognition among a larger universe of investors that they should take a more proactive approach to rebalancing their portfolio. Again, depending on the needs of their program and their view on the environment that they're operating in.
And many people talk about secondaries as a great complement or great fit for evergreen funds. Can you talk a bit about that?
I think secondaries is a great fit in part because of the diversification that it brings. In general, secondary focused vehicles are invested in many managers, many hundreds, if not thousands of underlying companies. And that diversification is really valuable from a risk perspective when you think about the nature of some of the investors who find evergreen vehicles of interest. Secondaries is also a perfect fit because of their liquidity profile. In general, these are portfolios that generate year-on-year distributions almost immediately post-closing of any given transaction. And so that ongoing cash generation is really valuable for the liquidity profile that these vehicles aim to offer.
And digging a bit deeper, in terms of a wealth investor audience, talk a bit about sort of secondaries and evergreen funds and how that could be really appealing for wealth investors.
As I mentioned, I think that secondaries allows one to gain exposure to private equity or other segments in a way that is really attractive from a risk perspective, rather than taking the view that I'm going to go back, a specific strategy or a specific manager. Secondaries allows you to get diversified exposure to a large number of high quality managers, high quality underlying assets in a manner that mitigates risk through diversification and allows for ongoing cash generation and liquidity should it be needed. So I think it's a perfect way to start building an allocation to alternatives for someone who doesn't already have one.
Coller Capital is often thought of synonymously with the secondaries market. You've been around as pioneers for decades in the strategy. Can you talk a bit how Coller is uniquely placed to deliver this strategy to a wealth audience?
So I think it's really important for someone considering an allocation to the space to back a manager who has a real track record. Now, with over 30 years of experience in the secondaries market, Coller has real experience of navigating market cycles and has delivered consistently strong returns over time. And that 30 plus years of experience brings with it the relationships and the track record that are needed to really find interesting opportunities. It also brings with it a wealth of data, which in today's environment is really critical for being able to find interesting opportunities and underwrite them in a manner that will deliver strong kind of risk-adjusted returns.
And in terms of the outlook for 2026, how are secondaries going to play out and what should wealth investors be paying most attention to?
Every year seems to be similar in that it brings with it record secondary volumes. And of course, you never know what's going to happen in the world, but we think that we are well positioned to see another very strong year in 2026. So as an investor in secondaries, we're really excited about the volume that we're seeing in all segments of the market. The year started off strongly, sitting here at the start of February, and we very much expect the same to continue through the year. So, for a wealth investor considering an allocation to the space, we think now is as good a time as any to really think about it.
Iyobosa Adeghe, Coller Capital, thanks so much for joining me.
Pleasure. Thank you.